a lot of people that are super deep in the space kind of forget that you need a bunch of touch points in order to actually kind of get super curious about Bitcoin as a whole. I came at it from financial perspective and it didn't necessarily click for me. And so I had to go a couple other routes to really understand what exactly was going on with the network and protocol before I was completely bought in that this is going to be the next financial reserve asset of the world.
Hello, everyone, and welcome back to Bitcoin for Professionals with me, Haris Satran, and my co-host, Ralph Jabran. Today, we have a partner at Early Riders, Liam Nelson, and Liam is here to talk to us about his professional journey from traditional finance to Bitcoin. So welcome, Liam.
Thanks for having me.
Hey, Liam.
Let's dive straight into it. Liam, you began your career at a hedge fund called Point 72. Tell us a little bit about that. Tell us about what drew you to the world of finance. What did you do at your time at Point 72, and how did that shape your understanding of the industry?
Yeah, so I have a very kind of traditional finance background. My parents and a lot of people in my local area had been focused on the finance industry. I went to Georgetown in their school of business and was a finance major, and so that was always kind of a goal of mine. Um, I initially started off at Point 72. Just for those of you who aren't familiar, it's a $40 billion long short hedge fund. It has an average hold period of stocks of 33 days. And so it can be fairly short. And while I was there, I did fundamental research on equities and specific industries. So covered a lot of consumer and industrials, and a lot of fundamental analysis on industries and supply chains, which was both great to understand how businesses and industries kind of worked really early on into my career, as well as was there during a really interesting time of started in mid 2019, and so got to understand how things worked before COVID, how the fundamentals of stocks became completely dislocated from the actual underlying companies during the COVID time period when there was a lot of dollars issued and a bunch of different funky things going on with the supply chains, which I'm sure we can touch on, as well as trying to understand how finance fits into things and learning about money there.
So
That's
yeah,
yeah.
go ahead.
No, just because for I want to. Not a lot of people get a inside view of the hedge fund industry. I mean, every person you ask will typically give you some weird answer of what's being done at the hedge fund. It seems that the hedge fund you worked at specifically seemed hyper fiat. The holding period of stocks seems so little versus where I worked in, where we held stocks for forever in the institutional asset management space. Selling a stock was a big deal. Like there had to be a really big reason to do so. But hedge funds get a really bad rep, and their name seems to be confusing. Maybe we can take some time. Some people, they understand the word hedge as protecting yourself. But in the case of hedge funds, for our viewers, Liam, maybe you can develop a little bit about that. Why is the term hedge in the industry when it comes to hedge funds?
So it's a lot of what they did was trying to get differentiated views on specific companies and industries. And so how Point 72 worked was they were mostly focused on US blue chip equities, so large cap stocks of like at least $1 billion in market cap. And 33-day holding period is um, about it's a little bit shorter at Point 72 than maybe some other hedge funds, but a lot of what hedge funds do in general is just trying to glean specific alpha from really industries that they have a maybe inside view on, not just because they have really differentiated data that isn't necessarily available to the whole market. And so if you have really solid understanding of both Ford and General Motors. Maybe one company can go, 5x long, or 1 p.m. can go 5x long Ford and 5x short GM and capture that little alpha there just because they think there's a difference in the two companies. But they obviously do so in a way that's, really risk mitigated and trying to protect their downside, which is always, the one of the most important things during this. And so there are obviously there are a ton of different portfolio managers. I think there were about 40 in the US when I was there, and some have different strategies. Some are long only, some are short only, but the majority are kind of market neutral, trying to understand what companies have the best chance of outperforming during just a period of chop in the market, or which company is going to outperform in a specific vertical that they have a really strong understanding of.
So, after you were at Point 72, you moved to a company called Kobe Capital, if I've said that right, who are an M&A specialist who acquire underperforming business units. So it sounds to me a little bit like special situations. So you've moved from being a research analyst at a hedge fund, and now you're doing M&A work. Tell us a little bit about what motivated this transition and what were the new challenges you faced?
Yeah, so just to kind of take a step back at Point 72, it was a really interesting time. I was there during COVID too. I covered a lot of retail names and a lot of names across the industrial space, and two that were pretty formidable into how I thought about markets as a whole, and specifically kind of Bitcoin. One being I covered dollar stores, which I don't know if you're familiar with them over there, but yeah, Dollar Tree and Family Dollar and Dollar General are some of the big names in the industry. And throughout my time there, especially during COVID, with both supply chains being disrupted by, COVID, as well as just a massive amount of dollars that were issued, I understood that there was a pricing issue, and a lot of the products at the store actually really stopped being a dollar. And I tried to do a lot more research on the space, and there were a bunch of different players that really knew the industry well, and some kind of made the parallels to the old five and dime stores of the past. So I didn't understand this industry, but a long time ago in like the 50s and 60s, and even prior to that, there were stores that were essentially sold everything for a nickel and dime. And those, you don't see them anymore because the number of dollars in circulation has gone up and significantly driven up pricing. So that was an interesting thing to me, and started to understand monetary inflation, and why that impacts actual business fundamentals. And then another thing that was fairly interesting to me was the GameStop mania, just because one of the books that Point 72 had invested in was Melvin Capital, that was on one side of the trade that wasn't necessarily aligned with the retail investors. And so understanding that there was a ton of money in the system, and that people could, go companies that didn't really deliver too much value to the world and shrinking industries was just something that didn't really make a ton of sense to me. So during my time there, tried to understand, what actually drives a stock, but couldn't really wrap my head around how it makes sense uh, to have a time period of just 33 days. And so wanted to go for something a little bit more of a longer time period in holding, just because it made more sense and the fundamentals would actually connect with the valuation of the company. So going to an industry where companies were privately held just made more sense to me. So that's why I shifted to Kobe. They have a very unique strategy of acquiring underperforming carve-outs of large publicly traded companies. And the companies that they acquire are typically break-even-ish to loss-making. And so there is a large amount of restructuring or different business planning that needs to make sense there in order for the company to be acquired. And it's a very niche industry, but it's one that would allow for stronger operational oversight, as well as just taking a longer term time horizon for the companies we were evaluating, which was a little bit more interesting to me than trying to get all of the unique information and data that wasn't necessarily available to retail investors that gave Point 72 an edge.
Yeah, that's really interesting. A few things I'd like to quickly unpack. So it's fascinating that you got to witness the GameStop saga, let's just call it. There's a whole documentary about it. Like, definitely, I'm sure it's way more dramatic than the reality of things. But a lot of people hate hedge funds because the hedge funds are like the house in the casino, and retail is everyone walking in and just spending their money in the market and always losing. And for the first time ever, and this is a good segue into the Bitcoin conversation, network effects actually made a difference. So through the Reddit Wall Street Bets channel and a variety of other social media platforms, retail was able actually to unite. And this is not uncommon in the actual financial industry because what happens behind closed doors isn't publicly disclosed. When the banks or the bailouts occur, there is some form of network effects within that area. They talk to each other and they get organized and they strategically think on how to solve the problem. So I guess retail did the same thing this time around, but that must have been really interesting. And the second one, so Kobe Capital, and correct if I'm mistaken, but the way you described it, it seemed like they have kind of a value investing style that reminds me of Warren Buffett. Like, look for the underperforming but solid businesses that you can take and kind of restructure and turn around. Yet, over a longer period of time, that makes more sense with the alignment that you're talking about from a fundamentals to value. And I would assume that this whole, buying things with a nickel in a store and then having to buy them for more than $1. And correct if I'm mistaken, would you call that the aha moment when you kind of got more curious about Bitcoin and started to understand money, inflation, monetary inflation? And maybe you can develop a little bit about your journey in Bitcoin and how you got to where you are today within early riders.
Yeah, 100%. So, I mean, that was one of my aha moments. It's a lot of people that are super deep in the space kind of forget that you need a bunch of touch points in order to actually kind of get super curious about Bitcoin as a whole. Um, that was one of my aha moments of, trying to understand what's actually happening with our money. Another one was I was fairly recently out of school and saw that Bitcoin just had the best risk adjusted return of any asset and was over $1 trillion in market cap. I had heard about Bitcoin a little bit before, but um, it was a little bit too small and for me to be super interested in, and I just was in college, so didn't have a ton of capital at that time. So just I didn't necessarily spend as much time as I wanted to, which is unfortunate. I think everybody kind of does that though, at first. And but yeah, trying to or seeing that Bitcoin had the best risk adjusted returns, which was the holy grail of financial metrics, was something that's really got me interested in it, with as well as trying to understand what's actually happening with the monetary inflation. Seeing just how many dollars were printed during COVID was another big factor for me. So I think it's kind of a combination, and it really needs a bunch of touch points for somebody to get super interested in trying to actually understand this, because I came at it from financial perspective and didn't necessarily I read the white paper the first time and it didn't necessarily click for me, and so I had to go a couple other routes to really understand what exactly was going on with the network and protocol before I was completely bought in that this is going to be the next financial reserve asset of the world.
So you're studying that while you're still a TradFi specialist, right? You're spending your time researching Bitcoin while you're working in M&A and so on. How did you then come to the conclusion that you need to move across and get out of TradFi and start working in a Bitcoin related industry?
Yeah. 100%. I always thought Bitcoin was going to be the best perform, or after I did some more digging and uh, was solidified in the bear market when, I just went crazy with reading and a bunch of different reports that were out there and learning everything that I could, reading every book there was, that I understood this is going to be the best performing asset and I want to be to align myself to capture those gains, I looked around a couple places and thought there were some interesting companies that were now actually monetizing this, both on their balance sheet. MicroStrategy was an interesting one to me, as well as catering to those customers that were had a growing network effect of the number of Bitcoin users. And so when I went to Early Riders, I saw they were the first Bitcoin denominated firm. They were utilizing Bitcoin as a hurdle rate, which was how I was living my own personal life at the time of, denominating all of my investment decisions and should I buy Bitcoin or should I do this, as well as my personal expenses. Should I buy new fancy shoes or whatever, or just buy Bitcoin? And most of the time, the answer was buying Bitcoin. Not all the time, because you need food, and there is marginal benefits to a lot of other expenses out there. But that's also how Early Riders approaches its businesses. That you need to actually drive revenue, and you can't just hold on to the Bitcoin forever. And but the main reason why Early Riders was really interesting to me is because they were focusing on offering products and services to Bitcoin users, which is going to be one of the few metrics that I believe is going to grow faster than Bitcoin in terms of its US dollar amount from here, as well as was putting all of their expense company treasuries in Bitcoin, as well as measuring the opportunity cost of offering a new product or service higher, etc. in Bitcoin. So it just made complete sense to me, clicked immediately, and was a natural fit.
That's really interesting, especially because I guess early riders took what a lot of Bitcoiners do, which is compare the opportunity cost in every decision of their personal life. And then they've turned that into a corporate philosophy where even at the investing level for a venture capital fund, they have to look at the opportunity cost. Is this going to outpace Bitcoin? If not, then you just invest in Bitcoin. Very interesting of a concept. But speaking of that, so what is your role at Early Riders? Maybe you can give us a little bit of background on that, and then I'd like us to kind of talk a little bit about some of the inefficiencies and challenges that you observed while working in TradFi that you believe Bitcoin can address.
Yeah. So, um, first of all, with the hurdle rate of Bitcoin, I think it just makes sense, just because there's a growing cohort of individuals as well as companies now that just essentially use both dollars and Bitcoin, dollars or their local fiat, as the way that they measure expenses. And then Bitcoin is just the best savings technology out there. And so it's essentially, while most people in my generation have used, the SPY as just like a dollar cost averaging method or whatever low cost index that's fairly similar, especially for retirement accounts. I think that Bitcoin is just overtaking that just because of its fixed supply, growing network effects of users, and native properties such as different custodial opportunities and ways to manage keys. But yeah, in terms of my role at Early Riders, it's everything from, helping manage the portfolio companies to support them in whatever way is most helpful for them, sourcing new deals, by, speaking with a bunch of different portfolio or founders in the industry, as well as, making sure that I'm speaking to RLPs just to, give them all the information, give them updates on our team, and, do some fundraising efforts on our side. So kind of a jack of all trades, as well as producing a bit of content too, just to educate the market, just because a lot of people out there think that, it's just still a complete scam. And honestly, I think we're going to be stuck with this for quite some time. I think, last cycle it was FTX that, just said Bitcoin is a scam, and same with BlockFi, Celsius, etc. That all got lumped in with Bitcoin despite being different. And this time, a lot of people probably are going to say that Trump coin is the same exact thing as Bitcoin, or um, even GameStop acquiring Bitcoin, or getting the board approval to acquire Bitcoin. I think that many people will still just say, oh, okay, it's just Bitcoin is a good tool for businesses that don't actually generate substantial cash flow and yield and don't actually have a strong operating model. And that's just not true. It's just the best savings technology, not just for a dying company, but for a growing company. And Tesla was one company that is good to see acquiring Bitcoin, but would like to see more companies that continue to just offer strong business models, denominate their returns in Bitcoin, just because very, very few have outperformed the hurdle rate of Bitcoin um, over a long time period.
I think you've given us this idea that Bitcoin requires a mindset change, and you personally, you ended up making better life decisions. So not buying stuff you didn't need, right? Buy stuff you do need, and then translate into the professional space, making better long-term investment decisions. So, I mean, that tells us, I guess, that it can disrupt traditional finance models and improve the asset management and venture capital process. But in order to get us to institutional adoption, so we know that Tesla's doing it right now, we know what MicroStrategy is up to, but wider throughout the industry, what are the main factors that drive this institutional adoption? And what hurdles are there for broader adoption?
Yeah, I mean, one of them is just that if you're making a ton of money, you don't necessarily see the demand for Bitcoin. You're doing just fine without it. And trying to tell somebody like Steve Cohen, like, you don't understand money, is just like, that's not really going to fly when he's made so much. And honestly, I was fairly surprised that Larry Fink really adopted this. And it wasn't necessarily because he really believed in it and did the research himself. It was because one of his employees came to him and like said that this is something that we really should do, and do hats off to him for being really open to this. But I think it's just going to come from kind of a bottoms up mentality of, people are just going to recognize the benefits themselves of saving in the best money in the world. And those that have fairly lean organizations are going to be able to, or fairly lean organizations, or just are the sole decision makers for a firm. They're going to be able to implement this themselves, like the Fidelities of the world. I know they started a long time ago because the company is, family controlled, and the owner and CEO was a big believer. And so I think it's honestly just a factor of time. Individuals who have been saving in Bitcoin getting into more managerial and executive roles across different companies. And yeah, a lot of the large corporations have big compliance departments that are risk averse. And while every individual can necessarily see the benefits, it carries risk to be executed, both from a career perspective. If you don't necessarily see a ton of upside um, in your role, if the company adopts Bitcoin, and there's a lot of downside if Bitcoin goes down 80% again and you're going to get fired. The managerial and career risk isn't necessarily skewed, so that in large organizations, it makes sense to adopt a large Bitcoin position. So it just is going to take time until the Bitcoin price rises. It becomes more common across different institutions, and we're going to see kind of smaller, nimbler organizations continue to adopt this first, just like we've seen with, Bhutan adopting a Bitcoin or mining Bitcoin, El Salvador, um, stacking Bitcoin themselves. It's just going to come from kind of the edges first.
Yeah, and what's fascinating is, a lot of the OG or, Bitcoiners per se, they leave the TradFi world to work in Bitcoin, meaning there are less of these managerial people within these traditional firms selling or pitching Bitcoin to their board or to their CEO. But I think as the industry matures and more people start leaving to work in Bitcoin or start their own Bitcoin business, that's a way to kind of voice a vote of confidence in Bitcoin. So a lot of good talent is leaving traditional industries to work in the Bitcoin industry. So over time, a lot of these corporations, are going to have a hard time finding talent. And I think over time, we'll see that become a wake up call to start wondering about this asset. I mean, you were in TradFi, you could have stayed there and talked to, the hedge fund CEO managers about Bitcoin. I was in asset management. I've mentioned Bitcoin, but I'd be laughed out of the room every time I did. It was a scam. So all of us transition, but eventually I feel we'll find this sweet balance, what they say, gradually, then suddenly. But on the topic of Bitcoin,
Just
oh yeah.
on that in particular too, having the ETFs is really great. Honestly, just because there are large hedge funds and that have actually allocated to them. The ETFs allow for, you know, much tighter spreads when buying and selling, which is a benefit for those companies that are relatively short term in their time horizon, or, even they don't have to care about the actual price of Bitcoin, but they want to make money on, the difference that they think is going to happen between MicroStrategy and
Mhm.
Bitcoin, or any other Bitcoin proxies like Bitcoin miners and Bitcoin. And so I think that the securitization of different Bitcoin products, whether it's treasury companies, miners, um, ETFs, Bitcoin options, it's just all going to continue to, get more companies interested in easy ways to make money. And then, some will be more interested in continuing to understand it, like, why is this performing better than anything else, or why was I actually wrong about the trajectory of Bitcoin, and what are the main factors that influence the price. But I think there have been some hedge funds out there that have put on fairly decent sized positions in terms of the ETFs. We can only see the ETFs because those are securities, not if they actually purchase a spot Bitcoin. But I think that's a kind of another interesting way to get different hedge funds interested in the asset
I
class.
never thought I'd say this because I mean I'm I guess a maximalist in that I believe that ETFs are from the devil, right? Self custody and MIC is the way to go. But and clearly there is an advantage. I mean, particularly for pensions in the US, you have 401k. Here we have our pension products and what we call ISAs, which are individual savings account. In the UK, it's a much more difficult environment if you are a retail investor. I'm going through this process right now because our tax year is 6th of April. So a lot of people, they max out their ISA product in the tax year. And then as it clicks over to 6th of April, they max out their ISA in the following year as well. And I'm going through this process right now where I'm talking to as many providers as I can, Fidelity and Hargreaves Lansdown, all the big names out here in the UK. And none of them will offer any of the ETFs that are available to UK and European investors. So that's why I'm somewhat jealous of US retail investors, because we don't have that ability to protect our capital gains. And that's something that we're working on still.
Yeah, and
Yeah,
I
I
mean,
mean,
yeah,
oh,
go
go
ahead.
ahead, Ralph.
No, I mean, just to add to that, I mean, in the UAE, a sovereign wealth fund showed up in the ETF filings. I
Hmm.
mean, yes, the ETFs, in my opinion, are, not the end destination. They're just the bridge because at the end of the day, a sovereign would want to own the underlying assets in comparison to just having exposure to it. They want something that they could keep in reserves, similar to what the US is doing. So I think 2024 was a great year for Bitcoin. It opened the floodgates. The ETFs have provided tons of marketing. It legitimatized Bitcoin in terms of mainstream. And the vast majority, I think, of the holdings are actual retail investors, not institutions yet. So this is just opening the floodgates. It hasn't fully, taken in the inflows that it deserves. And as a result of that, sovereign wealth funds are now dipping their toes in this new asset class with a almost $500 million investment from Mubadala in the UAE. You have Pakistan, who just a few days ago did a 180 degrees on crypto and Bitcoin in general. All this is, sovereign game theory playing out live in front of us. And I believe this was triggered by the executive order signed in the United States. Basically, it was a green light for the rest of the world that, no sanctions are coming if you start using Bitcoin, because we're going to have our own reserve. Because sadly, that's the reality of the world. Everyone's looking at how the US is going to regulate it, because if they're on the wrong side of that regulation, it's just going to be a nightmare to, take back what you've implemented. So just something to think about. Liam, you had something you want to say before I cut you off. Sorry, go ahead.
No, you brought up a ton of interesting points there. I think that the ETFs, while they're imperfect, are a net benefit too. I bought my first uh, purchase of Bitcoin on Coinbase. It's not necessarily perfect, but it was a product that at the time was fairly accessible to everybody, and it just worked. I think that people will want the same for the ETFs in their account. And then, when the price goes up, they're naturally going to be more curious. Not everybody, but I think it just is a net benefit. And then one thing you mentioned on Mubadala offering or buying almost $500 million in the ETFs is, yeah, that's really interesting too. And you're seeing specific countries like the UAE get a little bit more interested in Bitcoin as a whole. I know that they've had JV where they're actually mining Bitcoin themselves through Marathon, and I think that may have been something interesting with the ETF SPY. I don't know if it was Hedge or some something like that. But right after the strategic Bitcoin reserve, I think it was like 2 days later, MGX announced a $2 billion investment in Binance too, which was pretty interesting. I think, for a couple reasons. One, I would assume that Binance has a big Bitcoin treasury just because they're run by Bitcoiners, and if they're making money by offering a bunch of trading fees and perpetuals, then it would be natural to stack Bitcoin on their balance sheet. And the founders have definitely seen the benefits of the higher Bitcoin pricing, themselves, and then probably just put it on their balance sheet. So I think it's interesting that, other sovereign wealth funds now see the benefit of actually Bitcoin being the hurdle rate, and uh, understanding that putting it on the corporation's balance sheet is valuable over time. And then another one is, yeah, the UAE has a number of different sovereign wealth funds that are fairly involved in the US, so a lot of AI investment too, and seeing um, the US Strategic Bitcoin Reserve probably was a moment where they wanted to accelerate that deal, and just understand that the space race for the last 5.5% of Bitcoin that will be mined over the next 115 years is on, and everybody's competing for it.
You're not going to like my opinion about this, but I think the UAE ETF filings is just the disclosed amount. I think the UAE is sophisticated enough in terms of digital assets. They've had a regulatory framework way ahead of the United States. They understand owning spot Bitcoin, they understand
Mhm.
custody. In my opinion, they have a much bigger stack that is undisclosed, because you go to Abu Dhabi, for example, you might
Mhm.
see Bitcoin mining containers in the city. And, They might be owned by Phoenix Group, but Phoenix Group is a investment of a sovereign wealth fund, so they own a share of that. So, in my personal opinion, this is speculation, don't keep me to it, but I think once the US starts buying officially, I think the UAE is going to come out and say, well, you're kind of late to the game. This is how big our stack is.
Yeah, and I know that they've been mining for quite some time. It was I think just looked it up. Zero Two is backed by the Abu Dhabi Sovereign Wealth Fund, and I obviously when you mine Bitcoin, you're going to be able to hold that yourself, and hopefully in a secure manner for their sake. Um, and so they likely have, and that was back in 2023 that the article came out. So they've obviously understood this for quite some time, and will yeah. So it doesn't really make a ton of strategic sense for the ETFs unless they just want to signal to the rest of the world that they should try to catch up. It doesn't really make a ton of sense why they would try to do that just in case, unless they're trying to, you know, get a rise out of somebody else, but it's interesting nonetheless.
They might be Mr. 100 million. You know, that address that keeps buying 100 million Bitcoin every day. I mean, who has that kind of money? So that's I'd love it that it would be like the UAE government, someone just clicking buy every day, 100 million stacks. But let's get back to early riders real fast. So that was an interesting tangent and quite the important one. But maybe you can tell us a little bit about the uh, what do you look for in investments, like in potential investments from the early riders Bitcoin denominated venture fund? Like, what type of companies are you looking for? I'm sure you have a theme. If not, walk us through your reasoning.
Yeah. So, number one, high growth companies. Number two, the founder that really wants to denominate all of their expenses and opportunity cost in Bitcoin. And number three is businesses without super high capex that have sound unit economics from the get-go. So we're not necessarily interested in those companies like the Amazons of the world or large companies that need super large network effects and high, losses and burn rates before getting to profitability. We are more interested in those companies that are doing something fundamentally different, have a sustainable business model right from the get-go, and can go out and actually manage and grow their Bitcoin treasury early on, as well as have the opportunity to scale early and often. I mean, we're in a really interesting time where there is a massive theme that's being recognized by the rest of the market of being able to do more with less. And that was one of the themes of early riders super early on, that many of these expenses would trend down significantly, both in Bitcoin terms. If you hold Bitcoin for a longer period of time, then you're going to see many of your expenses in Bitcoin go down just because you're able to actually put the dollar or expense side in fiat terms, while maintaining your savings in an asset that only grows. So that's one, but also there are just like an explosion of different tools that allow everyone to be more efficient over time, whether it's, getting the message of why your company is fundamentally different to the market, understanding how to build out the new product or service in a compliant, sound way that will be around for hundreds of years by using a number of different AI tools out there, as well as just different messaging to the network. So those are some of the things that we look for. In terms of specific industries, um, they don't necessarily have to be Bitcoin specific, but that is a theme that we love just because the number of Bitcoin users is going to be the only thing that grows faster than Bitcoin over the next 10 years, in our view. And so if you offer them fundamentally different products and services that can really make their lives easier and then sweep those cash flows into Bitcoin, you're going to be in a very good position. but also there are a number of different other industries that can be disrupted out there, such as different security infrastructure that can be rebuilt. There are very many adversarially minded Bitcoin developers that have just created the best systems in the world and really thought about every worst case scenario. And those practices can be brought over to other industries like banking, tech, software, etc., as well as there's a really large opportunity for different financial services that cater to Bitcoiners as the network continues to grow. Um, so that's a ton there, and we're open to other industries too. So if this is something that you're interested in, please reach out. But yeah, we're really focused on companies that and founders that will denominate their opportunity costs in holding more Bitcoin because that's how myself, that's how I denominate things. That's how a growing number of Bitcoiners denominate things, and eventually the world.
So we're going to put you on the spot now, Liam. We want you to give us your prediction for the next 10 years. How do you think Bitcoin's going to affect the venture capital landscape? What's going to happen?
Um, in the next 10 years, wow. I think most of the other companies out there will there will be an explosion of Bitcoin companies that are not offering products and services to Bitcoiners. So what I mean by that is just Bitcoin treasury companies that will be, you know, 10 years from now, probably I would hope 50% of them have some sort of Bitcoin treasury. And then I think that there will be much smaller fundraisers just because a lot of the expenses of human capital is going to decline as different tools come out in the public that really allow for small teams to scale, meet their customers where they are. People are still underestimating how useful the internet is in order to meet all of their customers really locally. And then I would estimate that it's still less than 10%, and probably less than 5% of venture capital firms that will actually denominate all of their investments decisions in Bitcoin. But a lot of their companies will actually hold Bitcoin themselves, and the venture capitalists will probably maintain some sort of treasury in Bitcoin. I think that's been a growing trend too. I mean, the in the venture capital industry, a large number of them came out of PayPal and the PayPal mafia type of guys. Like you're seeing David Sachs, who ran a large fund. I know he said he had to sell his Bitcoin, and I think he may have had Ethereum and Solana also, but that his fund actually held, right? Peter Thiel has been a large Bitcoin proponent. Chamath is owned or claimed to own at least 5% of the supply super early on. So a lot of these guys really understand the value, um, but they're not necessarily ready to change their entire framework, I would imagine. Just because until the market really demands it, there's not necessarily a massive reason to do that. For us at Early Riders, though, the market is kind of demanding that for Bitcoin companies, just because, you know, I am part of the market. I denominate all my costs in Bitcoin, and there's a growing number of savers who just denominate saving all of their money in Bitcoin versus the opportunity cost. And so, as larger institutional capital that a lot of venture capital or that allocates to a lot of venture capital demand side as well, then we'll see the rest of the industry shift. But I think many of the early stage companies will move faster than the actual venture capital companies that back them.
Interesting. So we're close to wrapping it up. I'll ask you one last question on my side before Harris wraps it up. But just high level, because you're so knee deep into Bitcoin, the industry. I mean, you work for a Bitcoin denominated venture fund, and you speak to a lot of people, investors about Bitcoin. What is the biggest misconception about Bitcoin that you come across? And typically, how do you address it?
I don't know if it's the biggest, but one of them is never sell your Bitcoin. That's a trope of Michael Saylor in the US government. Now, Trump has repeated it. I think that Bitcoin is a tool that actually it makes sense to collateralize it if you would like to at some point, but also it's a tool to make your life better. It's not the end state and everything that there is. And so whether it's from a personal perspective, it is all right if you sell some of your Bitcoin in order to um, fund large acquisitions in your life that are, outside of your typical monthly budget. Those things happen. And as well as from a business perspective, if you never, you know, use any Bitcoin as an expense or a way to pay for something, both from a personal and business perspective, like you probably didn't own enough Bitcoin, just because you're still holding enough dollars that you're not going to receive the upside of that. So that's one that comes to mind.
Interesting.
So I think we've come to the end of the podcast now. I'm going to ask you one final question, Liam. You've obviously had a career that spanned TradFi, hedge funds, and M&A. You've made the transition into Bitcoin. What advice would you have for professionals who want to make that pivot into the Bitcoin space? And what resources would you recommend to deepen their understanding?
Yeah, I would say understand where your skills lie and where there is value in the market for your skills. And I would say there's a ton out there in terms of research, both from and information about Bitcoin itself, as well as the industry that you're potentially trying to break into. So would just, educate yourself on where exactly the market opportunity is for you and where you can actually provide value. A little bit broad, but that's kind of where I would start.
Any particular resources or books that you recommend to people?
It really just depends on the industry. If it's Bitcoin mining, it's going to be, completely different than, an exchange or custodian or payments company. There are just a ton of different things out there. I would say really become an expert in your own specific field, and that's going to be the easiest way to provide value yourself.
Very
Yeah.
good. Well, thank you again, Liam, for joining us. It's been a pleasure to have you. And, I hope readers enjoyed it as much as we did. And thank you for joining us. See you next time.
Thanks for having me, guys.
Thank you.